Hey everybody, this is Eddie, and here is your midweek market update. There's not much that has changed since last week, and I think I talked about that a little bit on my Monday update for you. But so that's good news. The rates have not changed much. They're hovering around the mid sevens, and that's great for people who are purchasing primary residence. Things kind of have stabilized a little bit on the interest rate. But one thing I want to talk about today is I want to talk to you about something called a 2-1 buy down. And you've probably heard a lot about this if you've done any research at all on mortgages. A lot of lenders are talking about this. This is something that we can offer as well. So let's just dig right into this. Let's say you're looking at a $350,000 house. Okay, so let me stop right here and say the numbers I'm about to give you are for example only. This is not a promise of anything that you could get approved for or through me or any other lender. So this is just a scenario for you to consider. So again, let's go ahead and do this. Let's assume your credit score is 740 or better. Your purchase price is a $350,000 house. You're putting 5% down. Now you can adjust that either way and it'll change the payment some. I used 5% because typically a $350,000 house is not a house for first-time home buyers. Who would qualify for maybe a 3% down or maybe 0% down. So we're doing again 5% down. And let's say your qualified interest rate is 7.5%. And if you do a 30-year fixed loan, your principal and interest payment would be $2,325 a month. Okay, so $2,325 a month based on 5% down on a $350,000 house at 7.5% interest rate, fixed for 30 years. That does not include mortgage insurance, does not include property taxes or homeowners insurance. Okay, those things are not calculated in on that payment. So just kind of keep that in mind. So your principal and interest payment, $2,325. And let's say you want to do the 2-1 buy down. So how a 2-1 buy down works is, first of all, it's something that the seller pays. So if you are a realtor out there and you have sellers you're representing, you might want to talk to them rather than lowering the price of their house. You might want to have a discussion about being willing to come to the closing table with some seller-paid funds. In this case, it would be a seller-paid buy-down. So the seller would do the buy-down on the interest rate, and the reason I call it a 2-1 is because the first 12 months, you're going to get a 2% reduction in your interest rate. So if you're at 7.5, you're going to be at 5.5. And if you keep the loan and don't refinance during that first 12 months, then the next year you're going to save 1% on your 7.5% rate, so you'll be at 6.5%.